So I wanted to talk about the open and why the open is so important for like daily candle game and just in general. So even going into today, I was anticipating I was half leaning towards a red day just because swing theory and CRT even daily Sibi was you could say is hindsight, but anticipating red day, I wasn't not a wick this high, but down into here for low a day and then just like inside red buy up Thursday. Um, so the reason and going into the day, in which you can do every single day, is you got to remember that you can't change the opening price of a candle once it opens. So you have to remember as you open up and you're starting here, and you can't start anywhere else, and you cannot change it for the rest of the day. Like this is the most sealed price that you can have right off the open, in general, even because you can't move the open. So you have to remember that if this is going to be a red candle, a VIB has to get created here. You need a scenario where you would have to either envision or see or anticipate in some way a VIB getting created here, or if you're going to assume it's a green candle, a VIB then with a green body printing however high you think it's going to go, what have you, and doing it that way. But again, you can't, because you can't change it. That's how it can be extremely useful as to like what to anticipate, which is more likely. Because if you're just even saying to yourself, okay, down close candle is not more likely, I would just be willing to more see a VIB here instead of a buy body through here and like another gap. Even though a VIB is a gap, it's a different gap than a buy body going right through there. So you can already anticipate that as a close. Now, I'll fully admit, did not expect all this in one day. Planned on this low being dead, I really did, way ahead of time. Like when this FVG was lost here, it was kind of wraps. And even if you just look at the delivery since that retracement, or in this case reversal, rejecting highs, and you can see how they keep getting drawn out. Now, for this morning, I saw this kind of V shape here, right where low a day was. So truthfully, I should have bought that. Really should have bought that. But because it had a V shape and it went just up to internal, I was thinking just like this basically failed model here, retracement internal, go for new low. And because this is a V shape, just failure swing, stack, stacked. I was anticipating that to get ran, and then it just ran against me, and by that point, bearish turtles are being broken. So you can anticipate all of them just to get charged through, and more importantly, bullish ones are not being broken as well. Up close lows, all that, and busy continue even at the top, and we'll talk about that as well. But even like this VIB here, as a reference point, ends up trading back to it. So you can do that even like with this. That's why you get like that body fill here, specifically. It's because you have that VIB and you can use it as a reference. So even back on the daily, how you're anticipating that, you can use that as where do you want to be a seller, of course. At or above opening price. Obviously, this is way above opening price, but you would have to more so want to be trapping longs here than trying to short off this fractal internal move. Multi-drive down, retrace into this. Funnily enough, it was just the VIB that I marked out last night before I went to bed. Just to reference it and then collapse to the new low. So this is the failed version of it inside of a version of it where it works, basically. So that's how sus fractal, but it's more so, I realize, just switching when you need to, when you're supposed to. So it's not doing that and getting trapped on something like that. Because I bag held this good majority of the time. Went short again at the top, and then it just collapsed through and made it all back. It was terrible and also comedy. But again, daily candle, you can't change the open right now. So even in this, you know that, okay, let's think of a green candle. What could you really do? Because you have, yes, it's an FEG, but It hasn't been sealed yet, so depending on how high or low this trades, but you would have to anticipate a green close of some kind. And usually when you do something like that, you would ideally just like walk the high and you would reference it. So in this case, at least for me, if I was wanting like a green day, keep PDL in some way, shape, or form, and then just run it back to either you could use the VIB that we just created as a draw. Not necessarily even to hit on the day, but you could even do like a body fill. Do something like the low of this, or even maybe over to here. So you kind of want to visualize or think about like if you're going to go green, how are you going to do it? If you're going to go red, how are you going to do it? Because that's the only two options. You want to remember that as well. Like those are the only two. So which one is just more likely is all you really need. You're not trying to even get to like a solid answer of like it has to be red or it has to be green. Just thinking about it's more likely. Or like which could you foresee happening more so? Like even yesterday, you're looking at this going, okay, VIB green created over green body just kind of tearing through. Okay, so then there you go, red day off of that alone. And also VIB here as well, even. So if you can't change the opening here, what can you really do? So again, green candle, you could something like that, or again, use that as a draw. Or if you're going to go red candle, again, you can't change the open, maybe retrace up to something along the lines of here, or even the VIB in here, because you have this opening gap here. So this could be your end dog fair value. And then you run it down to wherever you think, or maybe even like down to here, would be like another double-ended move. You have the news to back it up, and it's only like 300, and we just ran what we did, so who knows. But, and also how strong the Sabi move was as well. And you can even sometimes you can do it better with order blocks, but take a measured move of how strong was that push, and then when you trade into it again, you trade that push again. So if you traded something in here, going down to here, something there, going down to there, But again, you're doing all of that just to figure out which direction or which candle color do you think will end up being, And then you'll dive into smaller time frame, all of that, and actually guess how we could deliver. So this whole premise of doing like the daily candle, all of this, you can also remember that you have a closure of the candle at a specific time, all the time, every single time. So while you're thinking about, okay, the red candle, you also got to remember what the delivery might look like, within the day, whatever it is, where it might be trying to go. What would the green candle have to look like intraday? So like even by the time you have an idea for it, if you're trying to be bullish, you say, hey, keep PDL. You have to do something like that, London open, rally like up into here, something just be done, Which don't get me wrong, 300, it's plenty of points, whatever. But what would you not want to see for that to happen, or what would be the other scenario, trading up and then you're already giving it up or anything, or you're trading way down here even, and then you're looking for some type of move back up, whatever the case is, and trying to line it up with those levels. But it all has to stem from really on the daily, because you got to remember at the end of the day, once the candles close and it's obvious, and again, because you can't change the open, what is it going to look like in hindsight? A big hammer candle or even a swing high that people may or may not have talked about. And then you're looking at this chart after it's all said and done and going, hey, how'd you miss that? Or I'm sure you've seen 1 hour consolidations where they just kind of Neanderthal and then do something like that. Or just whatever the case is. What does that delivery usually look like afterwards? Or even say maybe you're not expecting a cliff dive, maybe just sell off and then bounce back and then you close because it's the holiday. And even though you may know that this is a whole sell model, whatever, or even just a fake market structure shift, if you really want to go there, but whatever it ends up being, or even coming down to this, what should it look like? And because you have something like a holiday going into a holiday, is there really a need to go for this next 2 days? Probably not, you know? Maybe just retrace the last down close, even bounce, end your week, whatever the case is, closing at fair value or whatever other fair value you can come up with. But if you're anticipating those types of moves, what do you think it would, again, what would it look like? What should you be expecting to see? And even by the time you do go into New York and you're on the 1 hour or whatever, you got to remember you're only trading a few candles wide. Figure maybe 8 to 1 o'clock or 2, let alone 3, you're trading this many candles or even this many candles. So you want to factor that in as well, and then you tie it back to the daily candle. Where could it form? Where should it not form? Or what are you already anticipating? Because again, if you're going into something like, hey, down close candle, and you're existing above the open, and it's not closed yet, if you think about it, the candle's literally not closed yet at any point here, because it closes at 4 or 5, whatever you want to label it as. It's 12:30, not closed yet. You're above the open, hitting your VIB. Also, extremely chased longs with the break, and then your bullish total breaks, and then the rest of the breaks, and then cha. But regardless of that, just the fact that longs are basically turtle swirling and moving up that much without a retracement, you already get this break that I was thinking, and you could have been too, regardless of if you weren't or not going to go lower. It just didn't work the one time. It's 9:30, the pattern, whatever reason that it didn't is okay. It doesn't matter. But the fact that it did is what happened. So you get that push up with no retracement whatsoever. You just consolidate and push up again, and then you go BISI continue again. And even if you're going to say second tap on BISI on the 5-minute, this is the first tap on BISI, so BISI continues. Then rips, and by this point you're up close, or your bull turtle fails. Sibian retrace, everything else, down close highs, and then it's just gone. And again, you can anticipate that. No proper tracement, pushing, 3 drives, all that. You get something like that multiple times in a row, you can at least look for a retracement. Whether it's a sell model or something larger, you got to figure out, connect, whatever. But for that move in itself, or just expecting a down move, yeah, all day. So, yeah, keep that in mind when you're going into, especially if you're day trading, that's all you're doing. That's the max amount of time you're going to have on the day. So again, think, if it's going to be a down close, what would that look like? Maybe I even want a SIBI here to form. How wide can the SIBI be? Or do I even want a SIBI to form here? But you can do that after you can first ask, you likely see it going red or green, or then using all these clues to come to that conclusion. And then you form the trades all around after that. Because again, you're above the open and you're not closed. You're just sitting above the open and you're not closed. You, in theory, if it's just going to be a correct analysis, hit the sell button and then come back at 4 or 4:59, whatever, and close the trade. Yes, you'd have to trade at no stop loss, and you get why that's a bad idea. But you should also be able to see that premise, as if you're running out of time to be somewhere. 1 o'clock. Or just how far away are you from it, or whatever the case is. Obviously, you had 99% retrace, N-Dog, all that, this fake low that I thought was going to get hit and just wasn't. Even though it was literally later. You can use all of that to lead yourself in a direction or a bias, whatever it is, for that day. And then the only management you do is just basically either have it don't get margin called and then wait till the end of the day. Or have your stop wherever it is, of course. and then just wait on close, and that's your target. And that way you're not even doing anything other than just waiting till the close. And again, think about the daily, or just any candle, whatever, 2-hour candles you can do it with, 1-hour candles you can do it with, which your anticipation for the bias of like the next candle. Because even 1 hour, you're arguing, hey, give me a down close candles to continue off this, to continue whatever V-shape recovery, and then 9 a.m. closes like that. By 10 a.m., you pretty much know that it has to close green. Just off this alone, completely invalidating. Down close now supporting, running this, closing way above, and you should anticipate higher prices. And that's just all that is just higher prices. How it's going to do that, you use everything else, but just anticipate higher prices for something like that, closing above, wick below. So going into 10 a.m., you already know it's very likely just to be a green candle off that. So you know not to short off that alone. Now, whether you played power 3 and did all that, or just we're looking at internal turtles on like 3 minute, you could absolutely see that it was just loading up longs, all within a down close candle with a bunch of people's highs just floating above there, just to expand through. But again, if you're already anticipating 1 hour, 2 hour, oh, this has to go green, and then even by the 10 o'clock, you're looking at that, the next candle really can't go red, or if it is, you would have to degen strat it right at 11, or right at the open, and it should fail. So like by 15 or 10 minutes in, you'll know, okay, the degen isn't working, because the degen ideally should have set the high of the open. That would have been it. It shouldn't be poking above the open like that. So your degen in this case is immediately invalidated. And again, just the way the candle closed. How many times have you seen closure like this bullish, what have you, and then the next candle just goes red? Probably less often than it closes green and just keeps ripping. And also you can just factor in not the fact that you're going from one candle to the next, but you're also here with these turtles still above. Why would you not just keep ripping through them? So you can tie that with the fact that you close this candle like this and you go quote unquote PDH, close your above, assume the next candle PDH, and then you get small body, which means accumulation. All it means is accumulation. In this case, close well within the range, all that. Next candle open, high, whatever, bond auction, sure. So you can do it on the daily. Again, what's the next candle going to be? Or do it on the 1 or the 2 hour and give yourself a bias for your session. That's like what they're going to close. Same thing Monday. You close a fat hammer, big bullish candle like that after breaking all this. Do you really expect a red candle after that? Pretty unlikely. Pushing. Same thing even here. You see a type of closure like this, anticipate a green candle, boom, you get another one. There's your bias for the next hour. You can even scalp something if you want, or just give you a general direction. Even this, you get a ripper candle like this, you really think it's going to start just trading red, and it's not a crypto, it's going to give some decent type of delivery, because even if it was going to reverse, it would look something like that and give you that type of candle to print. It's not just going to instantly kill candle it. And the likelihood of that, even in itself, is pretty small. So think about how much more likely you are just to get the green bullish candle in that case, boom, ripping right after, and then again, you get a closure like that, anticipate that again, and even you get this, and then you get something like this, you're barely losing the fill often, from a bullish trend. So it's just keeping that stuff in mind, and then how you think the candle can then do it, because one of them is basically going to be completely illogical or way less likely, whether it be bullish or bearish on whatever time frame you're looking at. And it can be hard, again, on the daily to do that right when it opens at 6, just a shot call, but it's honestly your best time to do it, because you have the most, not say ambiguous information, but you have the least but also the most solidified thing, which is you can't change the open. So then again, you can just use what do you think you would be getting for your ideas for price. Or even again, if you think, say on the 1 hour, that, or you could even anticipate some type of down move again under PDL, whatever, rally Thursday Friday trades inside, and like you end off the week, within that at fair value even, or something like that. Whatever. Okay, so how would that look over 2 days, and then reverse engineer it, how would that look on the daily? So even then, you could be more inclined to say, hey, green candle, give me the dip buy, and quote unquote walk the opening price. If you want an example, walking the opening price, walks it over, does whatever low manipulation has to do, and then closes back in, and then just continues on. Walking the open. You could argue this one's walking the open, but I would rather say something like this one, just opening and then boom. Because again, on a daily, you can often hit that. Now this is CFD, so there's probably gaps. There's actually a lot more gaps, but same thing. Walking the open with the previous candle, because you're anticipating X, Y, and Z, whatever. Something like this, maybe PDLs, or even this Monday CRT, whatever. You're walking that price and seeing kind of where it can go. It's a little bit better on CFDs because there's no gaps, but you'll just see it a bit more frequently, so not even that it's better. But yeah, that's what you want to try to see and anticipate. And then just use that over and over and over, because even this, you want to remember, a bunch of longs were here. They all just got trapped. You now have this. And there's no reason you can't just counter pair something, So you just got to ask yourself which one is more likely. And now, as you're going into the morning session, like say as you wake up for New York, actually, that's also why I like doing it at 6. You can rule out a good amount of possibilities, because you got to remember, by the time it's say 8 o'clock, you now only have this window to this window to really trade. Because all of London will have printed and told you ideally what it's trying to do or what it might be trying to move towards. Even like if London moves up, down, whatever it does, London low a day even, that can tell you something going into New York. And then that way some move doesn't look as ridiculous, because you now also remember that you're closing at 4, 5, whatever you want to call it. So you're going to run out of that time in that day to even do something. And so you can use that to also limit your expectations or just targets in general. And that way you'll have something more in check as to where you could realistically go that the algorithm is like actually trying to do. Because even like this, you have only these as old reference points looking back from here. This all in itself here is still 100% tradable. It's just a fractal move inside of all of that, And again, because if you're day trading, that can be your whole AM session, as you just caught the bull run because your bearish turtle broke, so you're just riding this all the way up. And by the time it's lunch period and you're usually done, you're closing out ideally some of it, just because of timing. If you try to be like done at say 1 o'clock or whatever it is, So if you're day trading, there's your pretty much whole AM session. Very unlikely are you just to run it all the way to try to pull nothing, but if you did, then there you go. Yeah, that's the most important thing to remember for sure. You can never change the open, and so you got to remember that candles only have a certain amount of time to do things. You're gonna do something like walk the price, or again, whatever you think it's gonna be. What would a down close candle look like to you? What would an up close candle look like? Because, say it again, at the end of the day, it's going to be in hindsight and just sitting there after the fact. And you have that information to review and see what it did and like how it happened. So that way you'll be able to see it in real time when it actually happens. Because, again, you got to ask, how ridiculous is an up move up to here versus a down move like down to here? Or whatever the case is for your green and red candle. And again, you'll have London to print, and you can use a bunch of other rules, down close highs, whatever, for even more delivery, or even for your bias, whatever. Because you can just, again, ask, like, 1 hour, what's 9, 10 a.m. trying to do? Again, if 9 a.m. closes like this, because you're already anticipating a bear candle, and it doesn't give you, and it closes like this, 10, 11, or the very minimum 10, again, should be rocketing through everything. Also, your bear shield's getting broke. Throw that on top, and there you go. So I'll leave it at that, but absolutely remember that is the most important factor. You can never change the open.